Right, let's look at why interest rates on government bonds is the most important factor that drives the value of gold. Now, what you need to understand is that professional investors only buy gold if the interest paid on government bonds don't protect them from inflation. So we all know central banks have an inflation target, call it 2% in most advanced economies. Now, let's say we see inflation going above the central bank's 2% target, and the markets are predicting that the central bank is going to raise interest rates. Now, as an investor, you could be sitting on the sidelines and wanting to put your money to work in the markets, and you're looking at bonds and you're looking at gold. Now, you know that the central bank is expected to raise interest rates. So to you, the investor, you think to yourself, do I want to buy government bonds that are going to pay me more interest at a time when the central bank is reducing the money supply, which will cause inflation to go lower, which would mean the interest I'm earning from the government bonds, the purchasing power of that currency I'm earning is going to be going up in value because prices are falling? Or do I buy gold that doesn't pay me any interest? Well, obviously, investors buy government bonds in an environment when the central bank is raising interest rates, because the interest they're earning from the government bonds is going to be holding its purchasing power because the central bank is withdrawing the money supply, and higher interest rates will cause inflation to go lower. So prices in the real economy will fall. That interest you're earning holds a value. Now, on the flip side, imagine you're a professional investor and you see inflation falling beneath the central bank's 2% target, and you know the central bank is going to cut interest rates. So again, pretend you're an investor on the sidelines, you have money and you want to invest it into gold or into bonds, and you see the central bank is going to be cutting interest rates and increasing the money supply. So you think, do I want to buy bonds, which is going to pay me less interest at a time when the central bank is increasing the money supply, which is going to increase inflation, which means the interest I'm earning on the bonds are going to be going down in purchasing power? Well, obviously not. Because why would you want to earn bonds which pay interest and the money you're getting paid in interest are actually losing value because there's now going to be inflation? So what do you think investors do? They buy gold. And that is literally why professional traders are only ever buying gold if they're looking at what the central bank is going to do with interest rates, and if that interest rate is going to protect their money from inflation. So if you've been trading gold using technical analysis, price action, chart patterns, and you've been struggling to be profitable, well, now you know why. You have never understood what drives the price of gold until today. So if you want to trade gold like a professional and get a profitable edge in your trading, click the link below and I'll give you new information on my fundamental gold course.